Hey, this is Brad Gill at NextHome Lifestyles. Welcome back to another market update for the city of San Jose. It is August 15th, 2022. We're right towards the tail end of summertime. Kids are starting to go back to school. Let's take a look and see what's happening in the local market. Are we still on a seasonal pattern? Are we continuing to normalize? What's the scoop? Let's dive in right now. Currently, we're going to take a look at active and pending numbers across the city. This is looking at single-family homes, condominiums, and townhouses specifically. So active inventory, we're actually down to 1,012 units from last week where we had 1,084. So we're definitely starting to see a bit of a trend as our active inventory is no longer growing. It's actually starting to plateau and curtail and go down a little bit. Pending, let's see what's happening with demand. Well, it looks like our demand is starting to increase as well. So for the second week in a row, we've had an increase in the number of pending properties. We're up to 602, which is quite a bit higher than where we were last week at 563. So again, it looks like we are starting to move again in that seasonal normalized direction where we usually see a pickup in buyer activity from the months of August through about November. That's when everyone returns from all their summertime travels. As the kids go back to school, there just seems to be more activity picking up. We usually see a larger number of sales occur in this last few months of the year, as well as in the beginning of the months of the year. So moving on, what is actually happening in the trends? Well, as you guessed it, over the last 7 days, we had a decrease in the number of new listings coming to the market, this time with 191, as opposed to last week where we had 195. So again, a bit of a trend as we have fewer homes coming to the market. As far as demand, well, last week we reported that we had our interest rate level drop for the first time below 5% since April, and it seems to have brought more buyers back into the market. So again, returning from vacation, school going back into session, more time to dedicate to home shopping, and we have an increase 15% higher week over week. 161 units went under contract as opposed to 140 last week, which was still up 20% from the week before. Now what's interesting, we're gonna have to keep an eye and see if these trends continue, because demand trend 161 is trailing right behind our new inventory trend of 191. So again, that just shows the frequency of purchase is starting to pick up a little bit and our inventory is starting to come down. If that continues, we should see again home prices stabilize and possibly even a return to multiple offers again within the next 60 to 90 days, depending upon, of course, how the overall economy, inflation, and most important, interest rates do, because that affects buyer confidence. Speaking of which, market expectations, we did have an increase, substantial increase in the number of homes that came off market. We're up to 71 units over the last 7 days from the week before where we saw 54 units come off market. Again, that's probably a lot of properties were listed back in April, May, when we started to see the demand trend diminish very rapidly as those interest rates started going up. So a lot of those homes have probably been on the market for 60, 90 days, and they're just getting tired. So that's why we're seeing a little uptick of those properties coming off. Next up, we're gonna talk about price changes. So this week we saw 374 price changes, or about 37% of our active inventory underwent a price change. That's down from last week. The important thing to watch there is about 30% of the active inventory ordinarily sees a price change. Anything more than 30%, and it can show again the changes in the market, a slowdown in buyer demand. And of course, anything under that shows a very rapid, fast-paced market. So as we watch these numbers, it'd be interesting to see again, have we peaked? Are we starting to come down? The numbers definitely show the beginning signs of it, but we'll continue to have to keep an eye on it as we progress to the end of summer and into fall. And last but not least, the mortgage rate, which again has been one of those key motivating factors in controlling or influencing buyer demand. We did tick up to 5.22% from just under 5% the week before. So we'll have to see how the quarter point in interest rate affects that buyer demand. But overall, I think it's factored into the market with all the data coming out, with inflation starting to calm down a little bit. So of course, all eyes on inflation, all eyes on the Fed, and of course, all eyes on what's happening in the market. I hope this brings some value to you. If you're thinking about buying or selling, please feel free to call us. We'd love to sit down and help you guys strategize the right plan for your next move. Otherwise, thanks again for watching. And I look forward to being back with you next week with another market update.